What's up, guys? Today in this video, we're going to be going over Market Cipher A, which is part of the Market Cipher indicator package, and it's created by CryptoFace. He's a trader. He trades Bitcoin and other cryptocurrencies. He and his partner developed this indicator, and it truly does work, and it's an awesome indicator. I highly recommend it if you've ever thought about getting into trading, or if you want to get into trading. Market Cipher is truly Market Cipher is the key, and it's the key to success, and it'll help you become a profitable trader if you use it the right way. Um, if you are interested in Market Cipher and getting it, there will be a link in this description, in this video's description. All you got to do is click on it. It'll take you to the MarketCipherTrading.com website where it's listed and everything. But without further ado, let's get into this. So if you do have it and you're on TradingView, it'll just be up here under the indicators. You can see there's Market Cipher A, Market Cipher B, Market Cipher DBSI, which is dual band strength index, and then Market Cipher SR, which stands for support and resistance. So today we're going to be going over Market Cipher A. Let me turn it on real quick. So Market Cipher A is just these symbols above the candles along with these EMA ribbons. So first we're going to be going over this green dot right here. I'm going to circle it, this green dot. And what this is it's a bullish indicator. It's most reliable on the 6-hour time frame. And that pretty much just means if you use it on lower time frames than the 6-hour, it might still work, but the probability of it working or the rate of its success is going to be lower, just because the lower time frames do tend to be more risky. And also Market Cipher, the whole package, it was mainly based off of the 1-hour time frame, I believe. I might be mistaken. It might have just been Market Cipher B that was based off of the 1-hour time frame, but I believe the whole indicator package as a whole was based off of the 1-hour time frame. But with these green dots, they're most reliable on the 6-hour time frame. That doesn't mean you can't use them on other time frames, but they're most reliable on the 6-hour time frame. And I should probably mention this time frames. You can see they're all listed up here. You got 1 hour, 2 hour, 45 minute, 35 minute. What that pretty much means is, so we're on the 1 hour right now. This candle right here, or any of these candles, they just show price action within an hour. So let's see, price opened down here and went up to here within an hour. If you go down to a lower time frame, say the 6-minute, you're going to have more candles because each candle is only going to be 6 minutes long, or yeah, 6 minutes long, pretty much. So that the green dot is a bullish indicator. It normally follows a blue triangle like this. I mean, we have a green dot printing right here, but this green dot is not confirmed. These indications will not be confirmed until the candle closes. So you see this timer right here, 43, 48. That means we got 43 minutes and 45 seconds left until this candle closes. And if this green dot is still on there when this candle closes, then it will be confirmed and it will be a green dot, which is a bullish indicator. What you want to do is with this indicator is you want to interpret it over 3 candles. And what you want to see is you want to see these yellow diamonds. You want to see those on the next 1 to 3 candles. And what that pretty much just means is if you do see them, that does mean that a breakout is probable or possible. It's not 100%. It's not always going to happen. Like here, we see 1, 2, 3. Nothing happened. There wasn't a breakout. A breakout is just a big move to the upside. But then again, we are on the 1-hour time frame. I almost guarantee you if you go to the 6 hour time frame and look, you can find some breakout patterns. But then again, you don't want to base your trading or any of your positions off of one indicator. So I would never enter a trade just based off of a green dot and 3 yellow diamonds. Next up, we're going to talk about these yellow and red diamonds. They are trend strength indicators, which the yellow means bullish and the red means bearish. So bullish means more upward trending, prices going up, more green candles, pretty much. Bearish, prices moving more downward, red candles. Then, like I said, yellow's bullish, red's bearish. And you want to use these in conjunction with these EMA ribbons, which we will talk about later. And almost any indicator on here, any indicator at all, especially in Market Cipher, you don't want to base your trades off of one indicator. You want multiple things showing you or saying that the price is going to go a certain way, whether that be up, down. You want multiple indications saying the same thing. Next, we're going to talk about the red X's. They are these right here, these red X's. Oh, let's circle one, this red X right here. Okay, so this red X, it is a bearish indicator. You're going to want to use it in conjunction with these EMA ribbons. Pretty much a lot of these symbols on here on Market Cipher A you're going to want to use with these EMA ribbons. What you want to see with the red X is you want to see it printed after red diamond. That's what you really want to see. And you also want to see the EMA ribbons coming constricted, which means just getting really close together and changing from bearish gray to blue or bullish blue/white. So let's see right here. You see this red diamond and then you see a red X followed it. You got a good move downwards right here. Red diamond right here, red X follows it. You got a pretty decent move downward. And these are pretty constricted EMA ribbons. You can even see it's right here. You can see this top one right here is turning blue. And then right here, these are just super constricted and close together. A good downward move. Next, we're going to talk about yellow X's. Those are these right here, these yellow X's. These are manipulation. It's like a manipulation indicator. A lot of people say this indicator can't exist or whatever, but honestly, there's a trading strategy that you can use with these where it's called the 4 yellow X trading strategy. When what it is pretty much you want to see 4 of them printed relatively close together, and then it's good chance that you can enter a position down here and it'll move up. So let's say you had one more yellow X print down here or something, and the price did go down. There's a good chance you could get into a long position down here and make a good, decent chunk of profit right there. And what they pretty much symbolize is whale manipulation. And what that is um, what a whale is just a person with a lot of Bitcoin or a lot of cash that will manipulate the price either up or down. And their goal is to they're exaggerating a condition by manipulating the rate of buyback, which can indicate like a possible bottom or reversal. And what that does is it gets breakout traders who trade breakouts who want to find like big moves to the upside or whatever. It'll target them, and what'll happen is they'll exaggerate a position. Breakout traders will get in their positions and everything, and then and what that does is it supplies the local liquidity, and then what the webs will do is then they'll reverse their position. And what that'll do is push the price down even more, and that can liquidate people and or stop people out, which means their trade is closed and that's the end of it. I mean, they might have lost a lot of money or something, but that's what these these yellow X's are, is manipulation. And people say that it can't exist or whatever. I mean, you can see, I mean, a lot of times, if you go back, if you can find 4 yellow X's, oh shoot, I didn't mean to do that. Um, there's a good strategy, and it kind of proves that this indicator does work. I'm not gonna, I just really want to get into the other stuff, so I'm not gonna, oops, smart as I'd be. But I want to move on, but those yellow X's can be really good, like the 4 yellow X strategy I mentioned before. And also, they are more reliable on the hour time frame and above, um, just because that's how it works. Let's move on to the blue triangle, which is this right here. These blue triangles. What these indicate are, they're pretty much trend reversals. They indicate a possible reversal of the previous trend. So you can see previous trend right here, it's going upwards. Blue triangle pops up. It's a warning that momentum is decreasing and a reversal may be near. So it might take a little time to pan out, but eventually there is a pretty decent move downwards right here. We see a blue triangle print right here, and almost immediately after, look, momentum is decreasing, warning, trend might be reversing. We see this uptrend coming up, and then this prints, and then we get a good move to the downside right here. So next up, we got the blood diamond. Let me find one real quick. There's one up here, I believe. Yep, there's a couple. So that's these right here. These red blood diamonds. And what they are pretty much is they're these red diamonds, but they're filled with a red X. So if a red diamond pops up and it's being filled with a red X and it is confirmed, that means at the end of the hour or whatever time frame you're on, at the end of that time period, it closes and that's confirmed, then there's a good chance that it's going to move downward, because this is a bearish indicator. And you want to use it with the EMA ribbons. You want to see them constricting downward and turning from blue/white to gray. And this is a good example right here. You can see prints, you get these EMA ribbons. Let's see if we can, nope. You can see these EMA ribbons getting pretty constricted, and then they're also cutting into each other and turning gray. That was a good move right there. This one didn't play out as much. You also want to see it followed by a yellow diamond. So you can see this yellow diamond, and then we have a blood diamond followed by it. That was a big move downward. This one didn't play out as well, but I mean, nothing's 100%, especially in trading. And you never want to base your trades off of just one indicator. Like, I would never base my trade off of just this indication. You want to see other things. This one, yellow diamond, blood diamond prints after it. We get a pretty good move to the downside. All right. Next, and finally, we have these EMA ribbons, which are these blue/white or gray. Let's go over here. So EMA stands for exponential moving averages. They're used to determine the strength of the trend by looking at the distances between the moving averages. Um, you can use these as support slash resistance. You can see when price moves below these and they turn gray, these lines, um, they act more as resistance, and you're going to have more success probably shorting the market. You might have a little success longing right here, but overall, downtrend. And you always, the trend is your friend. That's what they say. You want to follow the trend. The price is under here and it's gray, you're going to have a lot more success shorting. Um, right here, big move. This is big move. Big short right here. But let's see, what else? Yeah, and when price moves above them and they switch from blue or gray to blue slash white, these EMA ribbons are going to act more as support. You can see price can move into them, but then they do overall act as support. And you can see this is a pretty good uptrend. You're going to have good more success probably long in the market. Um, like I said, blue and white is bullish, gray is bearish. And that kind of sums it up for Market Cipher A. Again, if you are interested in Market Cipher, definitely check out the link in my description of this video. Click on it if you want to learn how to trade. This indicator is key, and like this is like one of the best indicators. I've watched CryptoFace use it. I've used it myself. I've been profitable with it. I've seen Evan Aldo, who also trades Bitcoin. Jason Casper, he's a great trader. He uses Market Cipher. This indicator really does work if you put in the time to learn about it and follow what it's telling you. Create a strategy. That's a big part, and I'll probably be making a video about creating your own strategy. But I'm gonna be after I'm gonna end this video because it's getting a little long, but I really want to go into depth of each different part of Market Cipher. Next up, we're going to be going over Market Cipher SR, which is Market Cipher support or resistance, and then finally we're going to go over Market Cipher B, which is probably the biggest part of Market Cipher. Um, but make sure you like and subscribe to my channel to see more content. Definitely click on that link in my description if you want to get Market Cipher for yourself and learn how to trade. Um, but thanks for watching. Like and subscribe. Bye.